Welcome back. Today we'll be learning about the Nigeria Exchange Group, commonly called the Nigeria Stock Exchange. We'll be learning about the type of securities we have and the key terms and how it works basically, alongside the basic indices you need to know on the NGX. Now, the first thing was the NGX. So the NGX basically is the premier stock exchange, the platform where you can buy and sell shares of listed companies basically. So we have private companies and we have public companies. So a private company is basically one which its stocks are not traded on the stock exchange, while a public listed company is the one which shares are available to the public for exchange, which is the buying and the selling. So the Nigerian Stock Exchange, or the Nigerian Exchange Group as called now, was founded in 1960 as the Lagos Stock Exchange. Its headquarters is in Lagos and it's the largest stock exchange in West Africa. So we have over 150 companies listed on the exchange group, alongside over 30 trillion naira of market capitalization. And it became the Nigeria Exchange Group in 2021, which means its shares are also listed on the current exchange. How does the stock market work? The stock market works basically starting from the company itself. The company lists its shares on the Nigerian Exchange Group to raise capital. Maybe you are a private company prior, then you want to raise capital. One of the ways to raise capital is basically listing your shares on Nigeria Exchange Group to raise capital from investors, from the public. The next one we have the Nigerian Exchange Group Exchange, which is the platform for which trading is provided. Then the third one, we have the stockbroker. The stockbroker basically executes the buy and sell order on behalf of the listed companies that we have on the exchange. Then we have lastly, which is the investor. Basically, what we do, me and you, is basically we buy shares and become part owners of the company. Basically, what we refer to as the shareholder. So when you buy a company share, you become a shareholder of the company. So when you buy shares of the company, you become part of the shareholders. So if the company grows and becomes profitable, your shares increase in value, which we call capital gains. When your shares increases in value, that is, the current market price is higher than the prior cost which you bought the stock or the shares. And also you can earn through dividend, which is profits that is paid out of profits made to investor. So you can also make income through dividend, which is a share of the companies paid to investor. So you have dividend payout ratio and you have the retention ratio. What this means is basically if a company makes 100 naira of profit, for example, it might decide to pay just 20 naira to all shareholders and retain 80%, which is the 80 naira as part of expansion and growth opportunities. That's how basically the stock market works. Moving on, we have the type of securities that are traded on the Nigerian Exchange Group. The first one we have is the equities. So under the equities, is basically you buying a portion or having an ownership in the firm. The stock market is volatile, but the Nigerian Stock Exchange is not really as volatile as the US stock market, basically. So the prices rises and falls based on company performances, based on news, and based on other key factors that affect the firm, basically. So under equities also, we have high potential return and high risk. So a company can grow maybe 450% increase in share price, and also with high return comes high risk. So the returns basically, like we explained earlier, are the dividend or the capital gains. The second type of security we have on the Nigerian Exchange Group is the bonds, which are the fixed income. So you basically are lending money to a company or to the government. So it is called fixed income because at the end of the day, you're going to be paid a fixed amount. The fixed amount is what we call the interest. So as the bonds is being offered to the public, there's going to be a rate attached to it. The rate is called the interest. So there's lower risk as compared to equities. And example include FGM bonds, treasury bills, and commercial papers. So there are basic other factors that you need to understand before you know an economic performance, macroeconomic indicators that is going to tell you, is this the best time to invest in equities, or is this the best time to invest in bonds? Other videos we're going to be looking at that. And the third one, we have the ETF, the exchange traded fund. This is basically having a basket. The basket, you have many other stocks, This is basically you trying to diversify. You have stocks from maybe the industrial goods, the consumer goods, the banking goods. So you have them together, creating just one stock for you. So its aim is basically to help you make sure you diversify your portfolio at a lower cost. So, for example, we have the Lotus Alert ETF and the Neo Good ETFs. Then we have key market indices. Indices basically lets you know the performance of the stock or the stock markets in general. So we have the NGX All Share Index. This basically monitors the performance of all listed equities on the Nigerian Stock Exchange. Remember, we have over 150 plus companies listed on the exchange. So the NGX ASI tracks the performance of all listed companies. It lets you to know the overall score or the overall L score of the markets, the performance of the entire market. So when the ASI rises, the market generally is doing well. Then when it falls, most stocks are all declining. So you have specific indices to each sector. You have the NGX banking, which tracks all listed companies. You have NGX industrial, which tracks manufacturing and production companies that are listed. The indices tracks only companies that are listed. The NGX consumer goods, which tracks FMCG, which is fast moving consumer goods and consumer brands, basically. Then you have the NGX oil and gas, which track the energy sector. You have the NGX insurance, which tracks all listed insurance companies. And you have the NGX 30, which tracks top 30 stocks that are high in terms of market capitalization. So the criteria for NGX 30 is those companies with the highest market capitalization. When we get to key themes, we're going to be looking at what we mean by market capitalization. So this is just breakdown of the companies that we have under the NGX banking. So as from our logo, we can say this is First Bank, this is Rema Bank. These are listed companies, banking companies, basically. We have UBA, you have GT, down to Stanbic Bank Group. Then we have the NGX 30. Yes, so this, like I said, some companies in terms of market capitalization, basically. So in terms of market capitalization, these are some of those companies that are under the NGX 30 index, which the NGX 30 tracks, basically. So you have Boa Foods, you have Boa Cement, you have Aradel, you have Dangote Sugar, you have Lafarge, which is the WAPCO. You have most of them, the banking stocks are also falls under the NGX 30 also. So we have the NGX Insurance Index. Some of the companies listed here, we have the example from ASeM side down to various other companies, basically. You have the NGX Oil and Gas, which tracks the oil and gas sector, the companies in the oil and gas sector. From Total Energies down to Aradel, down to Seplat, you have all of these under this index. Then we have others too, which is the NGX Growth Index. So it basically tracks company listed on the growth board. We have the growth board, we have the premium board, and we have the main board and others, basically. So when the NGX Growth tracks basically small capitalization company, those companies that have growth potential, it tracks them. We have the NGX Pension. This is straightforward. It tracks those companies that are involved in the pension industry, basically. Then you have the NGX Lotus Islamic Index. So this tracks those companies that meet the Sharia Advisory Board criteria. For those investors that are concerned based on Sharia compliant equities or Sharia compliant stocks, they look at criteria such as which industry is this? They look at factors that include what is the business model, what does the company do, and how does it operate? And they look at the percentage of debts in the composition of the capital structure of the company. But this stocks basically gives the breakdown of that and tracks those companies that meet those criteria and are listed under the stock. One of the examples include the Aradel, we have the ASeM, and we have Boa Foods and the likes, basically. The key terms that we are going to be having, the first key term, we have the bull market and we have the bear market. When you add the bull markets, not just on the Nigerian Stock Exchange, but other exchange group also, other stock exchange, you have, for the bull market, this is basically when the shares or the stock prices are rising or are expected to rise. So investors are basically optimistic. They invest more in the markets in order to gain high capital gains return. For the bear market, so this is when the stock markets are expected to fall. So this is when you see panic selling and investors are trying to reduce they are waiting on each stocks that are not performing well, or they have pessimistic opinion about. So for dividend basically is basically the portion of the profits that is paid to shareholders. Remember, we said there's dividend payout ratio and there's retention ratio. So for the dividend, it's just the portion of the profit that is distributed to all shareholders, while the part that is retained for maybe expansion or for the growth of the firm. This is always got with the retention aspect of it. For market capitalization, or shortened to market cap, your market cap is basically your total outstanding shares of the company multiplied by the share price of the company, multiplied by the market share price of the company. So you have your total market cap. Then we have your PE ratio. Your PE ratio is basically measures how expensive a stock is relative to its earnings. So this is very important or very useful in terms of valuation. So the meaning of PE ratio means price to earnings ratio. So you have basically how this work is basically you have PE ratios of various companies in the same industry, so you can have a decision you are going to be making. So a lower PE ratio means the company or this company stock is undervalued. So you see investor investing more, while a higher PE ratio means the company is overvalued. So you have liquidity also. So liquidity basically shows you or tells you how easily is it for you to buy or sell a stock without affecting the share price. So you see investors, even though after looking at the PE ratio, you see them looking at how liquid is a stock, how liquid is the stock. If I want to buy now, if I want to sell now, how easily is it? So that's in terms of liquidity. Then you have IPO, which is an initial public offering. So when a private company is trying to list on the stock exchange for the first time, you have them doing an IPO, which is initial public offering. This is the first time they are listing their shares on the exchange group. Then lastly, we have the capital gains. The capital gains basically are the profits you realize for selling an asset when its current price, which is market price, is higher than its purchase price. So you can say there is capital gains on the stock exchange. Basically, that's an overview of how the Nigerian Stock Exchange works. And some other key terms we mentioned are not just relating to the Nigerian Exchange Group, but the stock markets in general, basically. So you can take your time to look at each of these key terms and understand how each of them work. One of the key things there is the bull and the bear market. You can also have when you short a stock and when you long a stock. What does this term mean? So those are the key things you need to know before we dive into macroeconomic factors and other key economic activities. We'll mention in the next video of stock market analysis. Thank you.